What is up, everyone? It's Derek Vandelander here, and in this video, I'm going to teach you how to trade hidden divergence. Now, this is probably my favorite setup, especially because the risk to reward on this trade is always so much better than any other trade setup that we have. And these work out very nicely, especially if we have a ton of confluence in the trade, okay? So let's take a look and see what we got going on here. But first, I want to thank you guys for being here. Super stoked to have you. The channels, we're nearing 100 or 1,000 subscribers, and that makes me super stoked. I'm excited. We have a ton of stuff coming, like I said, so stay tuned. Got some really good stuff for you guys. But after this video's over, you should have everything that you need to know about how to trade hidden divergence, okay? So what is hidden divergence? Now, hidden divergence occurs when the oscillator, which is our RSI, the indicator that we have, makes a higher high or a low when the price action does not. Now, I'm going to show you what this means. It's kind of hard when you don't see a visual next to it. But what happens with this is this often tends to occur within the existing trend. So this is a trending divergence, meaning if we see this type of divergence and we're in a trend, it's likely to follow the trend, okay? So, like I said, hidden divergence, definitely one of my favorite trade setups, if not my favorite. But I have many rules in order to take hidden divergence. So the trade has to be taken off the 50 moving average. In very, very rare cases, it will be taken off the 200 moving average. And I'll show you exactly what I mean by that, okay? But the trade has to be taken on some sort of structure. So basically, to take hidden divergence, we need confluence in the market. Now, I've been preaching confluence this whole strategy or this whole course, and you should be getting the idea of what confluence is. Now, we will be doing a really good confluence video later on in this course. This video is actually video number, I think, 17, which is crazy. We only have 8 videos left, and then you guys should be able to analyze the market your own way, okay? So, again, we just have to have that confluence in the market. So let's take a look and see what exactly I'm talking about when I'm talking about hidden divergence, okay? So, as you can see right here, we are on Ethereum USD, the 10-hour time frame. So this works on any time frame, okay? And that's the kind of crazy part of it. But right now, we're on the 50 moving average. As you can see, we already kind of wicked off a little bit. And this isn't the best example because it's not the greatest retracement, but still it is hidden divergence. Because if we were to take the low right here, based on our RSI, it's clearly higher on our TDI right here, but lower on price. So price is actually lower right here than right here, but our RSI is reading the opposite. Our RSI is telling us that it's lower right here and higher right here. So that's telling us that it's hidden divergence, okay? So when you're trading hidden divergence, that's what you're gonna see. And again, we're gonna go over a ton of examples in this video. So, as you can see, price rejected right off the 50 moving average, and this is exactly how the trades work out when you're trading them. It's very rare that we're gonna get some drawdown. I mean, we may see a little bit of drawdown, and I'm gonna show you an example of that in one of these examples, okay? But this is normally how the trade goes if it doesn't hit our stop loss. It will normally just go pretty much directly into profit and hit our take profit without any retracement or dealing with the mess of the drawdown, okay? So again, this is what we have right here, and this is what we'll see all the time when we're trading hidden divergence. As you can see, this is bullish hidden divergence, meaning I'm looking to buy off the 50 moving average right here. Now, if you look left right here, you see this area was rejected by the market. It's a resistance, okay? But we eventually broke through that area, but now we're retracing back down to the 50 moving average, which is turning our resistance now into a support with our hidden divergence. So price right here is clearly lower than where we're currently at, but on our RSI, it's showing us different, okay? So price right here is showing us the opposite than right here, okay? So when you're drawing that in a bullish move, you're gonna the lines will be going out like this. Now, when we're in a bearish move, the lines will be going in like that. And I'll show you an example, okay? So as you can see, price rejected right off of that resistance, now turns support. We have our hidden divergence right off the 50 moving average. I'm sure it was a Fibonacci retracement and everything lined up, but I'm just showing you examples of hidden divergence. We'll go over all that other stuff later on in this video. So right now we have a bearish hidden divergence. And again, I'm going to walk you through this, adding the confluence of why I would take this trade. So as you can see, we actually had hidden divergence right here and it tanked off the 50 moving average. So that could have been a trade in itself. But we came back down, we made a low, and we're making we made a retracement to the 50 moving average. So I'm going to walk you through the fundamentals of this trade, okay? So we're going to place our Fibonacci from the previous retracement high to the previous retracement low. Now, as you can see, our Fibonacci levels right here, we have the 38.2, the 50, 61.8, and 78.6, okay? So as you can see, we're on the 50 moving average and we're hitting the 38.2. Not only that, if we look at price, what it's doing, you can see right here, price is clearly higher right here than right here, but on our RSI, it's showing us the opposite. Now, that is hidden divergence in our trend. We have confluence in this move, okay? Now, our confluence is we have a trend line, we have the 50 moving average, we have hidden divergence, and the 38.2. I mean, that's just a simple move, and let's see how it plays out, okay? So market clearly just came right off the 50 moving average. Beautiful, beautiful trade. Beautiful trade. And not only that, if you see, price kind of rejected this area right here, kind of turning it into a support, now into a resistance as it rejected off that 50 moving average. Now, when you look left, we probably had more support than just that, and that's why it kind of gave us a little trouble breaking through this area, but you just got to be on the lookout for that, okay? Again, this is another example. So we have a clear, well, it's not very clear, but we're wicking off this area right here. This is an area that people had a tough time breaking through. We did it twice. I mean, we didn't quite reach this level, but we did up here and then finally broke through. Now, what we have here is hidden divergence, and it's actually a shark fin, a hidden divergence shark fin. So clearly, price right here is lower than right here, but on our RSI, it's showing us the opposite. That's telling us that we have hidden divergence. Not only that, we're on the 38.2 right here. So I'm gonna draw my retracement from the previous low to the high right here, and it leaves us pretty close to the 38.2. Now, I want you to take note on how it's not actually touching the 38.2 or the 50. Now, this is kind of cool to see how the Fibonacci plays because it works out very well, and it does this for a specific reason. So, like I said, it doesn't line up, and when I made the Fibonacci video, I kind of described that in a way on when this happens, it usually means that the trade's not lining up right here. But take note right here, we're going to come down, we're going to hit this support, or this resistance turn support, and we actually came directly off that 50 level Fibonacci. Because we were in the middle right here, there was no real Fibonacci level right here. We came down, tapped that 50, and then of course rose up. Now we would have got a little drawdown on this trade, but it wouldn't have hit our stop loss and would have went pretty much directly in profit, okay? Like I said, we had this resistance turn support right off that 50 level right there. Okay, so I'm going to walk you through another trade, and I want you guys to actually take notice in this trade on what's going on and what I'm going to explain right here. So I want you to take note on it. If you notice, the swing from the low to the 50 moving average isn't near as far or as many pips as an example right here even. Let's go to a bullish or a bearish move right here. So if you notice right here, this swing from the low to the 50 is actually a lot bigger than the current swing that I'm going to show you right here. So just take note, the swing from the low to the 50 moving average is quite a bit bigger. And I'm going to show you where this kind of plays a toll in something as far as my trading. So I notice when the swing's not as big, but things line up, we have hidden divergence, it's actually going to drop always past structure right here. I guess I can't say always, but it will normally drop and tank right off structure right there. Now, this was a great trade. We had our support finally broke through, and the support actually turned into a resistance. Now, we have the 50 moving average right here. We have hidden divergence. We're on the 38.2, and we're going to take this short based on that. Now, let's see what happens right here. As you can see, market tanked right off the 38.2. We had that hidden divergence, a beautiful, beautiful trade. Now, how we can detect that hidden divergence? Right here, price is clearly higher than right here, but our RSI is telling us opposite. It's telling us that it's higher right here. That's indicating that it's hidden divergence, okay? Now, oftentimes, hidden divergence will work off major support areas like I've been explaining in this video. My favorite type of hidden divergence trades are when there's a previous major support or resistance, and that resistance turns into either resistance or support, okay? So, I still, no matter what, will take my trade only off the 50 moving average, okay? And that's important. So as you can see right here, if you look left, we had this major resistance level. Now, price actually broke through the resistance level, made a new high, broke back down, actually rejected off the 50 moving average before climbing up. But my point is we actually clearly broke that resistance level, but when we came back down and retested it, it turned into a support level, and clearly the market rejected that level 2 times right here before finally breaking through. Now, where this plays a toll is we have this swing from the low to the 50 moving average. We have hidden divergence right here off the 61.8. Our resistance is now turned into support, and let's see how this trade plays out. Clearly just tanks right off that 50 moving average. And this is, like I said, this is how it goes when I'm trading. Now, I'm just going to give you guys a little hint because the next video is going to be your stop loss and take profit. But when I'm placing my stop loss, I usually in this type of scenario will place it a little bit above the 78.6, and my take profit 9 times out of 10 is going to be the previous low right here. So my take profit would have been right in this region right here. Okay, and that's just what I notice works out nearly every time, because oftentimes when this happens, we may get a divergence, and that divergence plays out. But I just go in, take my profit, and I'm good for the next trade, all right? But my stop loss, again, will be usually above the 78.6 in this type of scenario. Let's say we rejected off the 38.2, then my stop loss would be a little bit above the 50, okay? So that's how we get that 1-to-4 risk reward ratio on these type of trades. So as you can see right here, if I were to place my stop at above the 78.6 and my take profit right here, it's probably, based on just looking at it, it's probably a 1-to-4 or 1 to 3.5, around that region right in there. So that means, let's say I have a $100,000 account and I'm risking 1% of my account per trade. So let's say my take profit is 4% of my account then. So let's say that we take 10 trades and we win for the 10 trades, okay? So how we would get our percentage right here, and I'm just gonna give you, say that every trade is 1-to-4. So we won 4 trades. That means that we are up 16% on our account. Now, let's say we lose the next 6 trades. So we won 4 out of 10, but we lose the next 6 trades. And that means we lost 1% per every loss. So with those 4 trades, we're up 16%. But on that loss, those 6 losses, we're still only down 6% on those losses, which means we're 10% positive still on the account. So that's how important risk management is in order to have a really great strategy. And that's where you can utilize it within this move right here, okay? And the thing I really love about love about this trade is it's very obvious to where you're going to enter the trade. And if things line up, then it's a very great trade and normally will play out just how you've seen it right here. Now, there are times when you'll see a hidden divergence move and we'll see it reject off this area, but you'll notice like a major support area in here or something. Sometimes, and this is when you take when it hits that major support, because it's not maybe to the previous low yet, when it hits that major support area, like right in here, I'd set my stop loss to take in profit right here. So if it does reject off this support area, I'm still going to be safe within my trade. Okay, so that's how I do it. That's how I manage it right there. Now, again, we have another move right here. So the market rejected this area in here. Now, obviously broke through twice. But what happened here is we rejected this resistance right here. And this resistance, finally we broke through. But what did it do? It came back down and retested that resistance, now turned support. Okay. Climbs up, makes a retracement back down to that resistance, now turned support off the 50 moving average. We have a clear hidden divergence right here. And let's see how this trade plays out. Not only that, this is the third touch of the trend line right here. We're on the 50 fib level. Gosh, this is just a beautiful trade setup. And these are the things you're going to see. And they work on any time frame, okay? As you can see, market just rallied right off that 50 moving average. Would have taken profit very quick within your trade, and you're good to go. That's just how these trades work out. So if you guys learned a lot in this video, which I believe you did, you had to have, then please comment below. Please like my page and hit that bell button, because when you hit that bell button, it's going to alert you when I post something. And after this course is over, I'm going to be posting a lot of giveaways, a lot of cool stuff. So you want to stay alerted, okay? So do that for me. And again, you know, I hope you guys are enjoying this as much as I am. I'm getting tons of messages on people, you know, having killer trades within what I'm teaching them. And that's really what makes me happy, okay? So I'm very excited about that. Now, after this video, you're going to go to the Hidden Divergence Trade Management video, and we're gonna see you there.
Be pulling up. Remember they said I'm not good enough. I took all the energy, turned it to greatness. Now look at my life, man, it's looking amazing.